this end game might look like. I've been expecting it at some point where there will be, one way I looked at this, there might be a day where I wake up and there's two prices for silver, one that's set at the COMEX and the other one, which is what I actually have to pay to get some. And the wider that spreads, the greater the pressure on the overall market. What's your opinion of you've already hinted, you've said that you think that there's not that much in the COMEX. The CFTC has been complicit in some way in helping to, preserve, the CFTC might actually be just trying to preserve the amount of silver in the warehouses by going through their margin hikes and all of that and supporting all of that. What is your view of how this actually comes into fruition if we suddenly see this shortfall? Eastman Kodak says, hey, where's the silver? We want it. We have to stop our industrial processes until we get it. Tell us about that moment and how that comes about.
Well, first of all, I think COMEX is a joke, and I think all the paper markets are a joke. As you're probably aware, we trade 1 billion ounces of silver a day. 1 billion ounces. The world produces 900 million a year. And, rather than us saying, well, the buyers are speculators, what's the seller thinking? He's trading 1 billion ounces on the sell side, and there's all of, 28 million in the COMEX. There's obviously a shortage of silver. What is the guy selling it thinking? He's the guy with the unlimited losses. At least the guy long silver, he knows what his loss can be. But the guy shorting silver, we've already seen silver from a year ago go up by 150%. I mean, just think of the outsized losses. So I don't really think that the COMEX and the LBMA are serving much purpose in terms of supposedly being involved in the physical markets. They're not physical whatsoever. They're just paper markets. And on a daily basis, at most, we probably get about 1 million ounces of silver every day available for investment, because most of it's used for industrial. So here we have 1 million ounces available. We trade 1 billion ounces a day. I mean, it's almost beyond belief. It's surreal in a way that there would be that much trading. It's all paper. I don't know how we solve what is obviously a physical shortage here. There's not much. Primary silver production is not a big part of all silver production. So, and you see the kinds of moves we have where coin sales are up 30%, and industrial demand's up 20%, and the demand for solar goes up 100% in silver. I mean, the numbers are astounding in terms of growth of silver demand, but the supply goes up by 3 or 4% a year. So there's no way out of the physical imbalance in my mind. Maybe we end up with two markets, one physical and one paper. I think the more likely thing is that the COMEX probably defaults somewhere along the line. If somebody just stood up and said, fine, I'll take the 28 or 29 million ounces, it'd be all over. So, and that may happen someday.
Well, you raise an interesting point for me, which is why I actually prefer to own physical gold and silver. I was a pretty active futures trader for a while, but that was just a game. I am convinced that when that event comes, and it will at some point, that what they will do, the CFTC in this case and other rule setters, is they'll just change the rules, like they did with the Hunt brothers, like they always do, right? And when the going gets tough, what they do is they just change the rules and say, oh, were you long this contract? We're very sorry. We're doing a cash settlement at some arbitrary level. Like I think the warning shot across everybody's bow should have been the flash crash, May 10th, 2009. What the NYSE did was arbitrarily write in and say, oh, any trades that happen below this level is as if they didn't happen, but up to this level, they happened. And what I would love to be able to do in this case is peek into the books and find out who really benefited from having the floor of the broken trades be set at that level. And I will be shocked if it doesn't turn out that it's the most well-connected players who ended up really at the best advantage off of that. So my view, and this is perhaps cynical, is that the rules get changed rather frequently, and it erodes the most fundamental underpinnings of a market, which is that it needs to be free and fair. As soon as you have arbitrariness in there, which clearly it's not arbitrary because arbitrary sounds random. As soon as you have rule changing that clearly benefits one set of players over another on a consistent basis, it's only a matter of time before people lose faith, refuse to participate, and do what I did, which is just default into the physical market, which was a set of decisions I made a while ago.
Sure. Well, I think just the fact that the CFTC did what they did in the Hunt brothers situation, where you could only liquidate, which is a bit of a joke, and even this most recent example where you just pile on these margin rate increases as it's working shorters, and the fact that, they've had this CFTC investigation into the silver manipulation of '08 with no results, notwithstanding Bart Chilton coming out and saying it seems obvious there was some manipulation going on. So the CFTC, I think, has abandoned their principles here.
Yeah, well, certainly there's some complicity in there, and where there's smoke, there's fire. It's not a clean story at this point. That much is absolutely clear. So what I'd like to do now is ask a really another important question for people. I think you've got some insight into here for sure. Is gold versus silver. I've always maintained a 2/3, 1/3 gold to silver ratio on a value basis as sort of my general rule of thumb. And I invest in them for different reasons. Gold for me is a monetary asset. I invest in it because there's always the option value that gold will be remonetized on the international scale. Pick a number for what it might be worth under that scenario. Silver to me is still primarily an industrial metal, one without useful substitutes in many critical applications. So I have that's slightly, I split those metals and don't lump them both as precious in the sense that they have the same characteristics. What's your view there?
Well, my view is this, that I think silver should trade at something like a 16-to-1 ratio to gold. If the gold price was $1,600, silver should be $100. It's always historically been the rate. If gold was made a currency, which I think it will, I think the market's already made it, the reserve currency, the general market. You still need something for exchange that's workable. In other words, you can't be exchanging 1/10 of an ounce of gold for $150. I mean, try to get it down to $10. I mean, it's impossible because whatever you would have in your hand would be so small it would be unrecognizable. And therefore, I think that when that day comes, silver would also be included as a currency. And we're sitting here with theoretically 1 billion ounces of silver available, which today is only worth $36 billion. Well, you can't have something as a currency that's only worth $36 billion because it serves no purpose. There's just not enough of it around. So I happen to be of the school of thought that silver should outperform gold, and we came of that view strongly about in the middle of last year, just about this time, and it's sort of demonstrated that certainly in the last 12 months, and I think that will continue. So I tend to favor silver over gold these days.
Right, just on a price appreciation and a ratio basis, agreed, and also the fundamental supply-demand equation there is also, I assume, driving that decision at some point, and that point of view. Yeah. So here we are. And it's 2011. Where do you see, if you're willing to do this, where do you see gold going to pick a number by 2015-20? I mean, where do you see it ultimately getting to? And what I'm really trying to back around into in this question is understanding, when do we know it's time to sell? Like there's always a time to be long, and then there's a time to exit. What does that look like for you?
Well, first of all, you can't tell where it's going to go because you have to assess events that will happen in the future that haven't happened yet. So, for example, if we both agree there's going to be a QE3, well, I have no doubt it quickly goes to $2,000. If there's QE4, 5, and 6, it's almost unlimited. So it's hard to identify a price. I just think it's for sure going higher. Depending on the actions of government, that rate of escalation may accelerate here. When people ask me when it's over, I sort of look at three things, and one would be if you saw some kind of exponential move and you just thought that the gold and silver markets were become maniacal, and you might just say, okay, fine, it's over. That's number one. Number two would be if governments around the world and central banks of the world started acting responsibly, then they're taking away momentum out of the gold and silver markets. I don't see that happening, however. And, of course, the third thing, which is kind of obvious, is if they make gold and silver reserve currencies, well, you don't need to own them anymore, depending on the circumstances at the time. So those are the three things I kind of look to. The most obvious would be governments and central banks getting responsible, and I just see no signs of that whatsoever. In fact, I almost think that their irresponsibility is increasing as time's gone on here.
I completely agree. I have several of those same signposts, and I have one other one, which is keeping my eye carefully on the role of the dollar as the world's reserve currency. If that starts to slip in earnest, that's where I pile out of dollars into things, gold and silver being two very obvious choices for me at that moment. So I really need to thank you for your time here, and I follow your writings very closely. I love your missives. They're always packed with information. If people want to follow you or find out more about the funds you offer and operate, how do they do that?
Well, they can go to Sprott.com, and all the things that we write on the various markets, and as you're aware, we've been sort of focusing in on precious metals, particularly silver lately. And we have some pretty interesting analysis of the silver market. We also have given many, many commentaries on the economic outlook over the last 15-odd years. And most of those articles have been reasonably prescient in predicting most of the things that have happened. So if they go to Sprott.com, all the information is available. If they're interested in the purchase of gold and silver maple leafs, we have a little website called Sprott Money where we're involved in that market.
Oh, fantastic.